So now let's home in a bit on China. So we ran our screens across all the different assets. China's kind of interesting because it's diverging a bit from other equity markets. So after a spectacular start to 2023, where it rallied about 18% in the first month, Chinese stocks have drifted lower throughout the course of the year, trending down. The reopening never really came. Increased tensions with the US on a number of fronts. Troubled property sector and an unwillingness from officials to use that bazooka style stimulus that has worked in the past to prop up their market. So that's kind of kept certainly foreign investors away, and there's just less appetite to invest in the Chinese market. Now, as we head into 2024, we are wondering if maybe there's some value here now. Clearly, valuation-wise, this market's cheaper. It was a similar kind of setup in terms of sentiment this time last year, and we saw what happened in December and January, right? So things can turn and sentiment can suddenly change, and people are then hunting for value and to put money to work. Maybe there can be a bit of a bounce early next year. So that's what we're kind of thinking, but we are retesting those year lows down at 25 on FXI in the pre-market. So yeah, certainly no one really wants to buy this yet, but we need to start looking forward and thinking, are there ways to participate in some upside, maybe in Q1, like a rerun of what happened this year, and how could we potentially position for that? So looking at the dashboard, we see that buy calls is screening as the trade. Obviously, vol's quite cheap, spot relatively low in the range, and volatility carry's been negative, which means we've been realizing quite a lot relative to implieds. But to be honest, we're not really trying to catch a falling knife here in China. We know this thing. We've tried to buy it a number of times and it very rarely works. So we don't really want to commit to buying a load of delta here when the price action is not showing any signs of reversing right now. So is there anything we can do? So one thing we're thinking of doing is buying calls, but buying them a bit further out the curve in February, and then maybe using the front end to finance them. Because if you look at the skew is pretty flat. So that means upside calls in the front end are relatively expensive in terms of that there's not this massive skew between puts and calls. So that's something that can set up relatively well. So jumping into the trade idea, the trade idea I'm looking at is